Hi guys, it seems like all the press that is talking about these days is house prices and the property market and how everything is booming. And it's true, house prices are booming. Those of you that do know me know that my property investments and my home are in London, and last year wasn't really a great year for property investors in London. Returns were dampened and rents were depressed, and from my experience, they still are a little bit. I'm generally finding that tenants in my own properties stay for about a year, and then some initiate that 6-month break clause to capitalise on reduced rent and increased competition between landlords for good tenants. A typical example is where I had one unit which was rented out for about 7 months, and now that it's becoming available, the rent comparisons are actually 20% cheaper. That's a massive reduction and it's quite mad, not gonna lie. Now, as an investor in London, there is blooming news that the underperformance is grinding to a halt. In fact, London and her suburbs are now booming, June data now being available. So housing activity in the most expensive areas of London reached record highs, and that's due to lockdown easing and drawing more people back into the capital. But what does the data actually show? Well, transactions in prime central London areas have soared about 86% higher than the 5-year average. Guys, mad. Again, mad. Everything is just mad these days.
How rude of me. I haven't given you enough time to freak out yet. You may do so now.
And it's becoming very clear that easing of lockdown is boosting market confidence in the capital and creating a catch-up effect. It's kind of nice to see, love it or hate it. London does have a massive multiplier impact on the country. But let's dig a little bit deeper into the most desirable and sought after suburbs in London. Knight Frank, who are one of the leading London estate agents, showed a 3.1% increase in suburban prices, and there are some regions that have just had exceptional growth. Take Wimbledon for example, it's up 10.5% year to date. Dulwich again up 7.5%, and Richmond about 6.8% year to date. Now let's just contextualize for a moment.
Come on, baby. Tell me where you're naked.
We do have to remind ourselves that London last year didn't experience a property boom that was seen everywhere else in the country, and I talked about that in my cringe binge days back in January this year, and we even speculated whether house prices would soar this year, but you can click up here to go and see that video. Now, London didn't fare well for two fundamental reasons that resulted from the virus and the consequential lockdowns. You have to remember, London real estate is the most expensive per square metre in the country, and so switching out expensive London homes for larger properties in the countryside, you do get more space in the short term, and the longer term bet that hybrid working will be a central part of working lives, and so being out of London actually is okay. It's not really a bad thing. Lockdown, however, has stopped foreign investors from acquiring UK real estate. Now, with all the markets, when a price action takes hold, momentum follows as more asset owners try to cash out. We see it with Bitcoin crashing, we see it with the markets correcting, and we see it with properties where property owners, especially those with the larger pricier home, and shifted them before property prices fell further. I will say it again here, as I have said it in all my other crashing videos, markets overshoot in a correction, and a steady steely investor uses these events as an opportunity. But in any case, guys, the overshoot will also naturally add to that upward swing from the bottom. But what do I even mean by that? Because if property prices shrunk by 5% and then raised by 10%, newspapers focus on the 10% increase, whereas investors who sat through the whole thing, it's only really up 5%. So newspapers need to market the news in a way to sell it. I don't know if that makes sense. I hope it does. But you know what media is like. Sensationalize everything. For the current year though, there's also been a surge in activity naturally from the stamp duty holidays, with buyers rushing to complete purchases ahead of the first major tax break on stamp. Now, I have been tracking this on my own properties quite closely, because with the reduction in rent, which is now compensated by capital growth, it does provide some silver lining. But for a lot of 2020, I was being hit on rent and growth. Estate agents have even noticed that the demand for London has been ticking up since the easing of the first lockdowns in April. With those vibrant, affluent areas like Knightsbridge are seeing demand quickly recover, and buyer demand in these areas doesn't really seem impacted by stamp duty. And actually, that's a good point. Buyer demand is still strong despite the stamp duty holiday tapering away, and that's not just for premium London properties. The graph here actually shows quite nicely how demand has fallen post removal of stamp duty breaks. It's still higher than pre-COVID. And that brings us onto the key point around house prices and why they're likely to stay higher for the foreseeable. Even with significant tax costs coming back in for buyers, demand is likely to get stronger with international travel bringing investment activities back into the London property market, and with London leavers missing the benefits of the city returning. Agents are reporting that June was one of the busiest months for the rental market, with tenant inquiries and viewings at record highs. So this should stop rents falling further. So demand is likely to have an upward pressure on both prices and rents in the coming months. Now, I always tend to annoy a few people with my housing videos as an investor. I am more concerned with prices dropping, and with that and with house prices soaring like the summer heat right now, there is fear of a property bubble and a house market crash. However, it has proven resilient, and since then it's continued to strengthen. Now, I know a lot of people trying to get onto the property market right now, and also being a property investor, I'm deeply interested in how the property market evolves over the next 6 to 12 months. So I do cover more of this in a lot more detail in this video. So click here if you like this one, which you did, because obviously you're watching and you still over here, and I'll see you over there.